Hello guys, welcome back to my YouTube channel. If you're new, please consider subscribing down below and share the video to your friends. So basically in this channel we talk about forex market, we talk about stocks, we talk about property investment. Now the reason why we're talking about stocks, we're talking about the foreign exchange market is because we want to leverage some finances from there and invest it in property. So we basically trying to use these ones as businesses that will find the property or real estate sector. So today we're gonna be analyzing my favorite pair, which is GBPUSD, and just to see which opportunities were there and basically how this pair moves for beginners. Let's hop on to the screen.
The reason why I am documenting this is because I want to, when I reach the place of having to master the skill, I can go back and reference to where I am coming from. So you can take this analysis with a pinch of salt. I'm not saying this is what you should do. Basically, I'm just documenting my journey. So what I would do is I would use my top-down approach, meaning I would start from the higher time frames going down into the lower time frames. The reason why I'm starting from the higher time frames is because they are showing less noise and they are showing setups that have a higher probability of working out. So then the other tip is I would zoom out so that I can see the whole chart. So basically, if I'm looking at the market now, the market is forming lower lows, lower highs, lower lows, lower highs, lower lows. So if the market is forming lower lows and lower highs, that basically tells me that the market is moving in a downtrend, meaning the downtrend is the dominant trend in this pair at the moment. So then the next thing that I will do is I will connect my highs, then connect my lows, and then I would mark my extreme highs, okay, mark my extreme highs, then also mark my extreme lows, and mark my extreme lows, my extreme lows. Okay, I have marked my extreme highs, I've marked my extreme lows. Then the next step would be going to the daily time frame so that I can say, so we can either maybe use what we have done so that we can try to predict this big move. But what I would like us to do is to go back just to basically see how this pair moves. So by looking at this, I can see that the market has formed a structure here. Okay. Okay, there's a structure that has been formed here. And then we can also connect here so that we can see basically what the price is telling us. Maybe you can treat that as a channel, ascending channel or a wedge. It's up to you. So the market leaves clues, and your responsibility as a trader is to look at these clues and then follow suit. You don't try to put your emotions into the market that it's here now to do this. You follow the market so that you are on the right side of the market. So what I've learned is that there's no bad trade and good trade, right? But there is a high quality trade and a bad quality trade. And then, so okay, back to the chart. So this is one touch here, then this is the second touch, and then this is the third touch, right? So from the third touch, I would look for selling opportunities here. So what I would do, I would look for a momentum candle, maybe put it there. Obviously, you won't execute from the higher time frames, you execute from the lower time frames. So what I'm just showing you is just the approach. So from there, I would target this area, which is like 15.78%. So that's a big move. right? So within this drop, the market will form continuation patterns. In case you miss this move, you can come to it and look for a continuation pattern so that you can enter. You know, if you are late from this move, you can catch another move. So what I've learned is that this market requires you to have patience. Don't rush. Look at the market and follow suit. The market, as it moves, it keeps on presenting more opportunities. So in case you miss this big move, you can go into the lower time frames so that you can catch these moves, so that you can catch this retracement, right? You can either catch that one or catch this one, because the market is forming what is called a pinnacle, which is signifying a continuation play. It's either you put it like that, or some people would put it like that, so that they can say maybe it's forming an ascending channel or just some form of a wedge. Then if you miss this big one, it's either you can enter this one on the smaller time frames, smaller time frame, you target the same area, and then the other opportunity would come here on this momentum candle. Put your stop loss there, then you target the same area, right? So if you also missed that one, you can also look for another one here. It's just the market telling us what to do. Once it broke that structure, which is a pinnacle, like I've said, that signifies a continuation play. You can enter here and target these areas here. Okay, there's also another one, but I wouldn't take this one because it's closer to the target area. Okay, once it broke that structure, maybe you can enter there, but yeah, this one is risky, so I wouldn't take that one. So from just this move, you would have caught 1, 2, 3, 4 opportunities that are big moves to the downside. So basically what you're doing, you're just following the trend. You're moving with the big moves. You would leave the buys because the buys won't be significant as the sells, because your dominant trend is a downtrend, right? Okay, apologies about that. I just pressed the button so it moved to another pair there. Okay, so if we move back again, wait for the market and then look at what the market is doing. Let's go back. Look at what the market is showing us. Okay, once it breaks this channel, ascending channel, you can also enter. It's another opportunity there. You would target your lows. Target your lows there, and then what you can also do is, there's another one there which is showing a continuation play. Okay. Okay, if you go to the small time frames so that you can see this one, what the market is doing here, so that you can enter that one. So yeah, okay, so this one is like a mini flag, which is also signifying a continuation play to the downside. So you can enter here And then okay, so for some people, they would look at this area and then say this is a support, and then the market has broken support. It has broken support. You wait for the market to show you what it's doing. And what's nice is that once the market forms a pattern closer to a significant area, that whatever setup that is formed there has a high probability of playing out. So maybe what you can do is connect that, and then connect that, then also enter at the break of the structure. Maybe you use your, maybe let's say you target your 2% because you don't have any reference. You target your 2% and then you just manage that. Then okay, you wait for the market to show you what it's doing, and then okay, just touch there. Then the market is also forming another structure. Let's just connect. Okay, it's moving in an uptrend now. It's moving in an uptrend now. You can also look for buys, but remember your dominant trend is a downtrend, right? You would wait for it because you want to catch the big moves. Okay, wait for it, and then if you can look at this, okay, it's a clear structure that the market is presenting to us. Then what would be nice is that the market has formed a double top here, so there would be another opportunity somewhere here. You look for a momentum candle, a bearish momentum candle, then you execute. Your first target would be here, because you don't know if the market is going to reverse. Maybe you can use that as your first TP, but once you see that you don't want to really exit because there are more opportunities that the market can still continue to the upside, you can just manage the trade, maybe target here, just moving, you trailing your stop loss so that at least you can make 6% from there. Okay, and then the other big move occurred here. Let's connect these areas. Sorry. Okay, so the market is forming a downtrend here, but the dominant trend is to the downside. So we are obviously targeting the down movements. So you can either enter here, look at what the market is forming on the smaller time frames, then enter here, target here. Okay, maybe you can have small TPs within TP1, TP2. Always try to have those so that in case the market doesn't reach your overall target, at least you would have made money from the trade. You don't want to find yourself at a state whereby you're giving back to the market. So it would reverse, come here. It's either you would move your stop loss to break even so that it stops you out, and then wait for another trade which is confirmed with this momentum candle here. Would target, maybe target this, or be aggressive, target here, or you come to here, and then you let the market run, and you take that one, and then you wait for the small ones that will be formed. Okay, the market is forming a continuation pattern here, which is basically showing us that the bearish bias is stronger. So that's another opportunity. You can target this area, you can target this if you are more aggressive. Like I've said, if you miss this one and you miss this one, just follow the market. It's gonna form, or it's gonna present other opportunities. So if you look at this, there's something that is formed here by the market. Okay, then go to the smaller time frames. Do this, go to the smaller time frames. You just want to catch the big moves. You wait for that, and then the market has formed a double bottom here. You can enter at the breakout. Enter at the breakout. Maybe you can target this area. Yeah, target that area. If you're more aggressive, because the bias is stronger to the downside, you move and target this. Use the same target here for 6.8%. So for now, I'm just highlighting the big moves. You can basically, when you are on the smaller time frames, you would see better opportunities that will help, because now I'm using big stop loss because I'm just showing you on the bigger time frame. So if you go to the smaller time frames, basically you will see these moves forming, and then your risk reward ratio will be, you know, healthy. Because now it's not healthy because I'm basically using the higher time frames. So you target that area, and then you wait for what the market is doing next. Let's do this. Once we post that, let's connect that. Let's see that the market is forming something here. Okay, so the market now is in a downtrend. It seems like the pound is gaining strength. Same thing, you look at what the market is showing you, and then you follow that. I hope you did learn something at all. So if you're new, consider subscribing down below. I will try to record my journey in terms of putting the trades that I've taken as well. Thank you.